All right, well, we're live on the wrong camera. There's Victorio and Azalea. Say hi, guys. Morning Trade Pros, sound check 1, 2. Here's Mark. Mark, where you at? Mark's right there doing his dance. So we were supposed to be live on this camera, but YouTube decided to change their stuff, and this is the light. So you guys get to see the other view. Marky, can you kill the lights, actually? Because it's very well backlit for this moment. Thanks, brother. All right. All right, let's roll. So we got a few things to talk about today. First and foremost, at the moment, everyone's turning their attention now to the Jackson Hole Symposium, where Jerome Powell will speak tomorrow morning. That's expected, and now in prime attention of everyone and all traders. All right, today, Philly Fed's President Patrick Harker will be speaking, and Dallas Fed President Robert Kaplan will kick off the festivities at the J-Hole. So Jay Powell will speak at the J-Hole tomorrow, and it's confirmed. This morning, Fed's Esther George spoke. She is a hawk, a voting member, and a dissenter. And she said that she thinks we're in a good place to achieve dual mandate, repeats it's now time for accommodation, and says that economic risks are tilted to the downside. U.S. consumer remains confident, and she's happy to leave rates here. She is a hawk, meaning that she wants higher interest rates for longer and less stimulus. That's not a surprising view for a hawk. So it didn't really roil the markets as much. All right, at 7:30 in the morning, we also had ECB's account and of policy meeting for the last period, which is basically meeting minutes from July. They widely agreed on need for accommodative stance for prolonged period. So they're basically saying we need to support the markets for longer. But there were no announcements or any hints at new rounds of stimulus or lower rates. They just said that they need to be more accommodative for longer. So expect to see more action out of them in future meetings, but they didn't really give any clear takeaways or actionable items. Gold back down to 1504 this morning and sold off quite a bit overnight. Let's break down yesterday's meeting minutes because it was a pretty important event. All right. And the meeting minutes were very widely watched by traders and investors. And here's one thing you need to know. The meeting minutes are a look at what was said and done before the rate cut in July. So July 31st, the last day. It was a historic rate cut. It was the first one in 10 years. And so these meeting minutes are important, but they're by no way as important as tomorrow's event by Jerome Powell, because Jay Powell at the J-Hole could say some fresh things that nobody knew before. The meeting minutes are just a different look at the same information we already knew 20 days ago, 22 days ago now. All right, but they're still important, and we should still review them together as a team. All right, so minutes from July said that most officials saw the rate cut as a mid-cycle adjustment or policy recalibration. Two policymakers, well, before we go on for that, it's important to note that Jerome Powell said in his press conference that this is just a mid-cycle adjustment, recalibration of policy. All right. And now other members feel the same way. And as a whole, they've agreed on this as a recalibration or mid-cycle adjustment. This means that they don't think it's the beginning of a new extended cycle of rate cuts and market or monetary policy easing. All right. It's just a one-off. Have they done this before? Yes, in the mid-1990s. From May 1995 to February of 1996, they cut rates after a hike cycle for a mid-cycle adjustment, as you will. And from there, stock market rallied for another 6 years until we got 5 years, until we got into 2001 and it crashed. And then they started cutting rates. But during that mid-cycle adjustment, the Fed cut in between their hike. They started cutting the rates and then actually even started to increase them above the prior high. So if this is a mid-cycle adjustment, expect a couple cuts, but the goal here is to continue to hike later on down the road. All right, that threw the markets off a little bit. It was a little bit more hawkish than expected. Initially, put some sell pressure into equities. Gold prices rose, but this morning, the market shrugging off says, you know what? Screw it. We don't really care if it's a mid-cycle. The point is, we have 3 rate cuts priced by the end of the year. If you want what you want to call it, that's up to you. We're seeing what the market wants, what you're about to do, and so it doesn't matter what you call it, you're going to cut more. And they shrugged it off. So it was a little bit back and forth in the statements. They cited a few reasons for their decision to cut rates. They said that trade policy uncertainty was one of them. All right. Also, the fact that there is lower inflation than they want All right. They did say that low inflation is transitory, their favorite word, meaning inflation is expected to increase. And Fed officials did not see any concern about an inverted yield curve. All right. And a few officials said that lower rates could impact financial stability. In fact, two of them wanted to raise rates. There were two dissenters that way, and two policymakers dissented in the sense that they wanted to cut 50 basis points or cut twice. But the majority agreed one cut was enough, not transitory, but mid-cycle recalibration. And the idea is still to eventually start hiking rates. The market doesn't think so, though. The market thinks there's more cuts coming. Donald Trump doesn't want that. That's for sure. He wants one full point cut. So there's pressures on the Fed. This morning we had a tweet from Donald Trump pretty much bashing the Fed again. He said, let me read it to you. Jerome Powell's getting a lot of pressure. I think he's trying to get pressured out of his job, all right? Because I don't think the administration could kick. I mean, there has to be cause, all right, to remove a Federal Reserve chair. Otherwise, it would be seen as influence from the government onto the central bank. And the idea is they run as two separate and independent organizations, which we know is true, obviously, right, guys? Trump reiterates criticism of Federal Reserve, says they move like quicksand. Germany sells 30-year bonds offering negative yields. Germany competes with the USA. Our Federal Reserve does not allow us to do what we must do. They put us at a disadvantage against our competition. Strong dollar, no inflation. They move like quicksand. Fight or go home, said the Federal Reserve. Those German 30-year bonds tanked, by the way. They tried to sell $2 billion of them. They got $846 million. Who buys a 30-year bond at zero yield? $846 billion did. That's who. But they totally missed the ball on that one. They expected $2 billion capital. They got only 846. All right, that's that. In today's markets, Asia, Japan's up 1/10. Hong Kong's down 1 percentage point. China 110, so pretty much flat. India down 1.6. In Europe, at midday, London's down 0.6. Paris down 0.4. Frankfurt down 0.1%. U.S. futures, Dow down 0.2. S&P down 0.3. NASDAQ down 0.4. Right across the board on most markets, seeing a little bit of pullback. But we have climbed up and erased all those losses, and the market looks pretty bullish. All right. I think we're ready for another move higher here, at least temporarily. Crude oil up today. This morning, put a new fresh opening range high at 56.46 above the overnight high of 56.39. Now it's retracing a little bit, as it should. Gold prices are down almost 0.7%. Bitcoin's down 1.5%, just barely holding on to 10,000. All right. This morning we had initial jobless claims. We're going to have PMI composite flash at 9:45. Leading indicators at 10 a.m. Natural gas inventory at 10:30. Kansas City Fed manufacturing at 11. 4:30 money supply and Fed's balance sheet. So we got a lot on the docket this afternoon. And more importantly, we have Jerome Powell tomorrow morning. Jay Powell at the J-hole. All right. We'll see you guys tomorrow. Let me go and open up the trade room because of this morning's delay. I didn't really have as much time to get through as what I wanted with you guys. But that's how the cookie crumbles sometimes. You guys take care. Have a wonderful rest of your day. And I'll see you tomorrow. We heard you yesterday. You said you wanted to hear the inverted yield curve thing. So I've sent the video off to our editor. He's working on it. He's going to chop it up and put it up on YouTube. So thank you for replying. It's on its way for this weekend. Guys, take care and have a great weekend. See you later. Manager of TRADEPRO. Goodbye. All right, Trade Pros in room. Let's get started here. We have a lot to talk about, and let's